1.08 USD, up 0.033 cents, marking a 3.18% gain for the day. If you are just glancing at the ticker ASST on your screen right now, you might see a low-price stock flickering green in early trading and think nothing of it. You might think this is just another micro-cap tech play trying to find its footing, or perhaps a leftover remnant of the social media boom that never quite exploded. That is the expectation. That is what the average retail trader sees when they scroll past Strive Inc. on their brokerage app while looking for the next big squeeze. But the reality is that you are staring at what might be one of the most aggressive, ideologically driven, and structurally complex pivots in the history of modern asset management. This isn't just a stock moving up 3%. This is a company that is fundamentally overwriting its own DNA in real time. Most investors are completely misreading this chart. They see asset entities, the old name, the old business model involving Discord communities and digital marketing services, and they assume the valuation is tied to how many servers they manage or how their TikTok campaigns are performing. They are wrong. If you are still analyzing Strive Inc. based on its legacy operations, you are effectively trying to value a butterfly by analyzing the nutritional content of the caterpillar it used to be. The market is slowly waking up to the fact that this vehicle, ticker symbol ASST, has been commandeered for a much larger mission. We are looking at a company that is attempting to fuse the corporate Bitcoin treasury strategy popularized by MicroStrategy with the anti-ESG shareholder primacy asset management philosophy championed by Vivek Ramaswamy. Let's pause and let that sink in. The stock price you see right now, hovering just above the dollar mark, is becoming a proxy for a dual-pronged bet. One on the future of Bitcoin as a corporate reserve asset, and another on a cultural shift in how American money is managed. This volatility we are seeing today, that 3% jump, isn't random noise. It is the sound of capital repositioning itself as traders realize this is no longer a small tech firm. It is a financial vessel. When we look at the intraday action, the volume is telling us a story. Usually, stocks in this price range trade on sentiment and hype, but today the buying pressure feels different. It feels accumulated. We are seeing bid support coming in every time the price dips below that 107 level, suggesting that someone or some group is building a floor. This is often characteristic of what we call accumulation ahead of execution, where the market anticipates a major announcement or a filing that confirms the next stage of the company's transformation. Now, before we go deeper into the mechanics of this trade, I want to challenge a common belief. Most people think that to get exposure to high-level asset management plays or Bitcoin treasury strategies, you need to buy expensive stocks like MicroStrategy or stick to massive conglomerates like BlackRock. There is a prevailing notion that the smart money only operates in the triple-digit stock price range. But here's the contrarian take. The most explosive asymmetric opportunities often hide in these transitional vehicles, companies that are small enough to be nimble but backed by figures large enough to move mountains. Strive Inc. is currently sitting in that exact sweet spot. It is too small for the big institutional passive flows from Vanguard or Fidelity to blindly buy yet, but it's too high profile to be ignored by the active trading community. Let's break down exactly what Strive Inc. is doing, because the business model here is shifting tectonic plates. Originally, under the name Asset Entities, this company was a provider of digital marketing and content delivery services. They were experts in building communities on Discord, managing servers, and engaging with Gen Z audiences. It was a decent business, but it wasn't a world beater. Then came the merger with Strive Enterprises. This changed everything. Strive, co-founded by Vivek Ramaswamy, was built on a very specific premise. that American corporations had lost their way by focusing on political and social agendas, ESG, rather than focusing exclusively on excellence and shareholder value. By merging into a public vehicle, Strive isn't just looking to sell more ETFs, they're looking to build a balance sheet that reflects their worldview. And what is the ultimate asset for a company that believes in financial sovereignty and resisting inflationary monetary policies? Bitcoin. The company has signaled a clear intent to adopt a Bitcoin treasury strategy. This means they are likely to use debt, equity issuance, and operating cash flow to accumulate Bitcoin on their balance sheet. This is the playbook written by Michael Saylor, but Strive is adding a unique twist. They are coupling it with an operating business that generates fees from asset management. Imagine if you could combine the balance sheet leverage of a Bitcoin holder with the recurring revenue stability of a firm like Schwab Intelligent Portfolios or a boutique version of Fidelity Investments. That is the theoretical end state here. They want the volatility and upside of the crypto asset class anchored by the steady compounding growth of an asset management arm that appeals to millions of Americans who are tired of woke capital. It's a potent narrative, and in the marketplace, narrative drives price. However, we need to be realistic about the risks, and this is where the tension comes in. The expectation is that because high-profile names are involved, success is guaranteed. The reality is that executing a Bitcoin treasury strategy while pivoting a small-cap public company is incredibly difficult. You have regulatory hurdles. You have the sheer volatility of Bitcoin itself. If Bitcoin takes a 20% haircut overnight, a company like Strive Inc., which is leveraging its reputation on this asset, will feel that pain amplified in its stock price. We saw this with Tesla stock back when they first announced their Bitcoin holdings. The market didn't know whether to treat them as a car company or a crypto fund. Strive will face that same identity crisis, but on a much more existential level because they are much smaller. Speaking of identity, let's talk about the broader sector. The asset management space is crowded. You have giants like Interactive Brokers offering low-cost trading. You have Robinhood capturing the retail trader with its slick Robinhood app and fractional shares. And you have SoFi trying to be the one-stop shop for everything from SoFi Invest to loans. Where does Strive fit in? They aren't trying to compete on technology or low fees alone. They're competing on values. They're betting that there is a massive, underserved demographic of investors, people who maybe have a Fidelity IRA or a Schwab account but feel alienated by the corporate messaging of those firms, who will move their money to Strive simply because they align with the mission. This is mission-driven investing, turned on its head. Usually that term applies to green energy. Here it applies to unapologetic capitalism. Let's look at the technicals on the chart again. At 1.08, we are sitting right at a pivotal resistance turn support level. If you pull up the 6-month daily chart, you will see a massive gap down from when the merger uncertainty was high, followed by a slow, grinding recovery. The fact that we are green today, up over 3%, while the broader small-cap index is flat, suggests relative strength. Traders are watching the 115 level closely. If ASST can break through 115 on high volume, it opens the door to a gap fill that could take the stock significantly higher. But if it fails here, it could drift back into the sub-dollar range, which is a dangerous place to be for any NASDAQ-listed company due to compliance rules. The volume profile is interesting too. We are seeing spikes in volume that don't correlate with major press releases. This is often a sign of smart money loading the boat or institutional positioning. In the world of online investing and self-investing, retail traders often chase the news after it happens. The professionals position themselves before. The steady bid at 1.08 tells me that someone is happy to soak up liquidity at these prices, likely betting on a catalyst in the near future, perhaps an announcement regarding the size of their Bitcoin purchase or a new ETF launch. Now, I want to take a moment to ask you guys something because this touches on the core of Strive's philosophy. Comment below how many shares of Strive Inc. you currently hold or if you are waiting for a dip. More importantly, do you think a political stance belongs in asset management, or should money just be about money? It's a huge debate right now, and Strive is right at the center of it. Now, let's look at the money aspect of their business, the asset management side. Strive isn't just sitting on Bitcoin, they are issuing ETFs. These funds are designed to compete with the heavyweights. Think about the massive flows into Fidelity ETFs or Fidelity Mutual